Today, folks, your comments, your questions answered. As many of you point out, I'm a pathetic 30-year-old living in his parents' basements as a millennial, and we'll discuss that along with building out a long-term retirement portfolio. Tech stocks, overvalued, undervalued. Is it a bubble? Should you sell? We're going to be talking about high-income option strategy, ETFs, high-income dividend stocks. We'll talk about PPCE and investors in the community, buying real estate, and so much more in between. So if that's a conversation you think you'd appreciate coming from a Canadian investor, giving perspective on both sides of the border, just consider hitting that like button, because let's get right into it by first and foremost saying that you guys made this possible by just leaving comments and questions down on these videos that I posted over the last week. And this video is unsponsored, unsolicited, and it is brought to you by and inspired by my patron members. You are the ones that make this possible, and I thank you for supporting for $5 a month, less than a Starbucks coffee. And you can join my private WhatsApp group, talk with me directly 24/7, 7 days a week. Let me know what your thoughts are. And again, you can always come back and watch these videos for free. You do not need to support me there. Link obviously down in the description below. But this first comment comes to you from Matthew saying, bacon. Bacon. What the hell does that mean, Matthew? You put that into so many of my videos, and I can never fully understand what you mean by it. So please extrapolate a little bit. We got Vic Gill saying, I will hold my passive index ETFs forever, but I have been selling growth individual stocks to produce a profit or break even from when I bought at the highs. So firstly, this is a very complicated question you got to ask yourself, because as somebody who believes the tech stocks are overvalued in the macro, which bears get sent to slaughter, bulls will always reign supreme over the long term. I think it's important to point out that depends on where you're coming from. If you're a lot younger, I think you can cost average all-time highs, 52-week lows, and take it into the next 30 years. If you're in your 60s, it's a much more convoluted question you have to ask yourself, because the likes of even PPCE, this awesome dividend investor in the community, sold his Apple stock, and he's doing the same thing I'm doing, trying to buy real estate. So I'm selling stocks, and a lot of people hate that I'm selling it, but I need to get my living circumstance figured out. And he sold 14 stocks, and Apple was one of them, and he said Apple was overvalued. Now the problem here is Apple is so diversified, I can't tell what their future looks like. They just introduced a 5% interest savings account, which I think is more intriguing than their VR, because they raised $1 billion, and like a bank, they can leverage that. So I don't know what that value expands into the future and what that looks like. And we'll talk more about this in a second, because it's really intriguing, how life just takes these wicked turns. But let's talk about Apple and the VR. Very interesting, because this Vision Pro seems so different from Quest 3. The Quest 3 will dominate the gaming scene due to the controllers, price efficiency, and access to PC connections. It doesn't seem like the Vision Pro will have access to Steam VR. The Vision Pro seems like an iPhone in the form of a VR AR headset. And Tone said, the same way that BlackBerry, people said that BlackBerry would always, need a quirky keyboard, Apple has once again changed the game, and they have done this before, and I absolutely disagree. People have to remember that when Apple disrupted the phone market, because BlackBerry dominated, they were the first one to introduce texting and obviously introduce emails, but that was not data heavy. The infrastructure behind telecom giants wasn't set up for any intensive data going back and forth. And what did Apple do? They convinced AT&T that they could charge for monthly data and expand their revenues dramatically. And that was the real disruption that destroyed BlackBerry. People keep forgetting that it wasn't just the iPhone, it was the partnership and the extension into the form of data with apps and games and everything you'd be able to do on phones with data. And that took it to a whole new level, along with the fact they had a younger audience that loved iPods for music, right? And they merged it all together, and they really knew the segment of audience they were coming at. And BlackBerry just could not keep up. They just couldn't see that coming, and it royally screwed them over. You should go watch the BlackBerry documentary. It is amazing. So with the VR side of it, from somebody that uses VR 4 or 5 days a week, specifically for gaming, I've given up Xbox for it. I think Meta and Mark Zuckerberg commented on this recently, that he thinks that Apple's just making the market bigger for them. Because firstly, nobody is buying this for what Apple is kind of segmenting it for. The technology is amazing, but again, think about what Quest Pro was. I mean, Meta tried a very advanced headset that nobody bought, and they had to lower the price of it. Do you think Apple's advanced technology is going to lead to mass adoption for no reason when nobody's using it for work-based things or watching movies? We're all using it for gaming. So I'll be buying the Quest 3 100%. I think a lot of people will. And why not do what Ready Player One really inspired the world of VR to do, which is get the gaming audience first and then expand on the tech from there. Find the audience you need to tackle first and build the technology around it. That's not what Apple's doing. That's just my personal opinion. I could be wrong, but we'll find out. Steve says we are not, or this is a sad one. We are not. We are living like pathetic losers in our 30s, living with parents. We decide to haste our kids before we get old, or before we get too old. And I feel sorry that I can't provide my kids with a home. Some days I feel like I just want to give up on life. I feel like a failure. And this is really sad. And I'm only going to offer some perspectives from my living circumstance. In my family, the fact that I'm still living between parents' homes, the fact that, my brother thinks I'm a loser, like, to be in my 30s living with my parents, is very funny, because my wife, or my soon-to-be wife, she's Muslim, she's Indian, and it's actually very normal for them to be living with their families even into their 40s. I mean, they're more family oriented, and they don't consider that as part of their culture to be unusual, right? So I think I feel greatly supported by my family to have saved up the capital we've saved up to actually buy a house like PPC Ian's trying to do. And I think from a kid's perspective, as tough as this market is, it's going to make you stronger in life. It's going to make you have to figure out more technical ways to evolve, right? So I mean, that might be leaving. If I didn't have the money I had now when I was 20, I'd be going to Alberta if I knew what I knew now. There's just no point in living in these high places, these high expense areas like Toronto or Vancouver. It's time to just leave. So I mean, don't feel bad if you can't support your kids. We all have to figure that out for ourselves. I mean, that's not something that your kids shouldn't be heavily reliant on you. It's nice to give your kids stuff if you can afford it, but I mean, your kids shouldn't expect that. I think you don't need to pamper them into their whole lives. And I'm sorry that you feel like a failure. It's really sad that this is what kind of the market environment has led people to think. We're all just doing our best. And again, if you make $30,000 a year, I think you're in the top the top income earners globally just for making 30 grand a year. I think if you can go to another country, see what it's like living abroad, I think you really start to appreciate, even though it's expensive here, what it's like having kind of a first world perspective on things. Paul says, I live in a small city in Alberta. I bought my house at 24 for $240,000 in 2012. Hasn't appreciated much. It's worth 275-ish now, but still so much more affordable here. I couldn't imagine how my lifestyle would be if I were to move to Toronto or Vancouver. And I think this is the perspective of maybe you just grew up there, or that's what you've gotten used to. Because again, I've worked very hard. Me and my fiance have enough money to look at a price range between $600,000 and $800,000, and that's us owning with very little mortgage. The most we might have to mortgage would be $100,000 to $200,000, because we just don't want the tax inefficiency of liquidating my corporate account or selling out of my entire RRSP. So there's just some money I'm not going to have access to. But we're very privileged to be in a situation in our 30s, like literally I'm only 31, to have the option to outright afford a small condo, 2-bed, 2-bath. Obviously that would be like a mansion, or at least a 5-bedroom, fully furnished, detached home in something like Alberta, Edmonton, Calgary. But again, we have to ask ourselves that question of, what do we want out of our lives? We can afford to live here if we're a little bit more, frugal. We look at a little bit more less lavish lifestyles, but we have our family, and we're very family oriented people, and that would get very complicated if we move to Alberta. We have family there, but here it's just, we're going out every weekend. There's a lot of family oriented stuff that we do that I don't think is worth giving up for the longevity and overall well-being of our lives. He says Edmonton, or Lee Kang says Edmonton and Calgary have the highest income in Canada, and house prices, they're not too crazy. A great province to live, and I would 100% agree. Let's move on here. LJ says, do you think VRIF is a realistic choice for people in their 60s? Or like you said, go with the GIC and money market funds? So look, Dave Ramsey always says that you have growth. You should be putting your money in mutual funds at any age. Growth in income, aggressive growth. He has like this 4-bucket strategy that just seems insane to me, unless you're worth hundreds of millions of dollars. And I say that because Dave Ramsey doesn't care about dividends. He thinks you can just pull off the market. And I honestly think that if I was in my 60s in this kind of market environment, I would not want to have to rely on the volatility of the market if I absolutely needed that money. If I needed that money and I wasn't worth that much and I could retire, but maybe I only have $500,000 or $1 million and a paid for home, I would be 100% focused on money market funds, GICs, high interest savings account, ETFs, because you can get damn near 5% guaranteed with no volatility, and then put the other half in index funds, some high yield dividend stocks we can discuss here. But VRIF is very intriguing because this is a new ETF that probably couldn't even exist a few years ago, because there's just the options of this higher income stuff wasn't there. But take a look at this. This came out in 2020, and today it's only down 7%, but the yield on this is damn near 4.5%, 0.3% management fee. And let me just show you the components, because this is a wildly different ETF over what most people are probably used to seeing, because this has a Canadian corporate bond index ETF. It's holding a US aggregate bond index ETF, which make up about 60% of the whole portfolio. We have the developed all cap X North American index. We have the total market index, which is VTI. This is probably one of the most diversified ETFs I've seen that's very focused on more fixed income or bonds, which is good if you don't want the insane volatility and you want some consistency in your portfolio. I wouldn't put all my money in this, but it would be a great proponent to an investment portfolio, in my humble opinion. Again, if you're just purely looking for cash flow, which comes to the point of the cash ETF actually looks interesting. Didn't even know it existed. Thanks for the info. So these cash ETFs, there's a few of them. They basically just take your money and put them in high interest savings accounts where the best deals are. So like the cash one puts it into like Scotiabank when Scotia says, hey, if you open a new savings account, we'll give you 6 months at 4.5% or 5%. The problem with these is they're volatile based off the interest rates and what's available from banks. So they're better for short-term parking places rather than long-term parking places. But in this market, I'm sure you could ride this out for a good couple of years and make some bank as a diversified fixed asset investment if you want it. But Chris Arthur says, from satellite images, 25 separate fires all started at once in Canada. What the heck did you guys do? I don't know. I'm one of those guys that no longer watches the news. The news has ruined your mental well-being. I don't watch it anymore and I feel great. And then one day I wake up and everyone in New York is bitching at us like this is our fault all of a sudden. And Quebec is getting devastated because, hey, if you're in the mining industry, they halted all mining, drilling, and anything to do with geophysics, which really disrupted a sector over there in their busiest time. But guess what? It's raining outside, and if it continues to stay wet, maybe these fires that literally tend to only happen once in a millennia, like I don't think we've seen fires like this in over 100 years. It's terrible. It's unfortunate, but I don't know what to say about it. I'm sorry. It's just a weird world we live in. Palantir is profitable now. For those of you that don't know the AI bubble that I kind of reamed out with Palantir, you are the exact reason I made that video, good sir. I don't want to call you an idiot, but the problem I have with it is these people that don't know anything about Palantir technology, all they hear is AI and gap profitable, and that's all that people like Jeremy keep pointing out. Yet their gap profitability only comes from high interest savings accounts. It doesn't come from AI. It doesn't come from their tech. I mean, you go look at their income statement, and it was all $4 million from their earnings and $20 million from high interest. They're more of a bond company than they are an AI company from their cash flow today. Now that could change. They could cut marketing by 20 million. They're spending a lot of marketing that could hit the bottom line. But for now, I just feel like people are idiots that care about their gap profitability. And I think it's just because Alex Karp's CEO is an incredible marketer. He knows how to sell the company, and that's why the stock is pumping to the moon. And who knows, 5 years from now, it could be a $100 billion company. It really could be. But in the macro, I think you're all a bunch of idiots that are pumping it and turning it into a bubble. And most people that are real investors are excited when stocks go down, not when they go up. So all of you guys that are pumping it, you're going to be the same that went through the crypto bubble. And again, I don't think this is the crypto bubble. I think there's real applications to AI, unlike crypto that's being valued today in the market. But again, we're getting into a bubbly territory. And again, I got nothing against Palantir. Just the idiots that don't know what they're talking about, that can't read a balance sheet. My core holdings is CM, yielding around 6%. Another investment is an ETF called HMAX, offered through Hamilton, currently yielding 14%. Harnessing covered calls, consists of 10 financial Canadian monsters. I do not like this ETF. I'm kind of biased against these option income ETFs because they're just not that good, in my humble opinion. There are some that aren't that bad that perform well, but they have a long-standing history in the market, and I will not really buy an ETF that hasn't been around for longer than a decade. It's just hard to get an understanding of the management side of it. And this one is just the same as all these other ones. They tend to underperform, right? Because you're looking at an ETF that, though cash flows 14%, at the end of the day, total return does matter. It's not just dividend income that matters. And we can see here, guys, that this thing is down 11.15%. It only came into existence in January. We're barely 6 months into the year, and this thing's already down almost as much as it yields. You could have easily bought an S&P 500 ETF. You could have easily just bought a broad Canadian index, and you'd be doing much better than this. And again, I'm not trying to shit on these. I get it. People love them. They want their cash flow. There are some good ones out there. They're just not for me. I've never enjoyed them, and I've never found them to be that appealing. When I can just buy like something like the banks that are yielding damn near 6% that will increase the dividends, and at some point in the next 30 years, if I just held those banks, I'd probably be getting actually a higher yield than this on my initial cost basis if I just held through. But again, it's just my personal opinion. You can always add option ETFs. There's nothing wrong with them. But these are just my humble opinions based on your comments, your questions, and I pass the question off to you as always. I'd love to know what you think in that comment section below.